What's up, fam? ARK Invest has been telling us for the longest that they had a new price target set for Tesla and it was prepared to hit the street soon. Well, they decided to release it at 1 a.m. Saturday morning, East Coast time. Gots to get off the East Coast. But I'm finally taking my first look at this and I figured why not let's look at it together. So don't forget to subscribe to the channel and hit that notification bell so you can be locked in to the breaking news that I drop like this. Let's get into it. Last year, ARK estimated that in 2024, Tesla's share price will hit $7,000 per share, or $1,400 adjusted for its 5-for-1 stock split. Based on our updated research, we now estimate that it could approach $3,000 in 2025. To arrive at this forecast, ARK used a Monte Carlo model with 34 inputs. The high and low forecast incorporating 40,000 possible simulations. Our bull and bear price targets are the top and bottom quartile outcomes for the simulations as shown below. Well, we know now that the current stock price is around $650 with an adjusted stock price pre-split of $3,250 per share. Well, the expected case right now is for $3,000. That's close to a 5x from what we're currently sitting today. If you bought like me on the decline in the 500s recently, that gets you almost close to a 6x from here. Man, look, I am super excited about this. We have to find out where this is coming from. Because, I mean, look, even in their bear case of $1,500 a share, that is essentially crazy to me, too. That's a 2x from what we're currently sitting at now with a projection on their behalf of 25% probability of happening by 2025. Now, that bull case of 4,000 also has a 25% probability that the stock could be worth almost $4,000 from here. It's unbelievable to me. Folks, you got to hold on to your receipts because this is giving me pause. I mean, look, we have to see how they got to these numbers in the first place. Looking at their bull and their bear case for 2025 is not too far of a reach in their bear case, in my opinion. See, look, Tesla is estimated to produce 5 million vehicles in 2025 according to their projections. The reason why I say that is that looking at these projections and after Tesla produced 500,000 cars in 2020 means essentially that they will be producing over 1 million vehicles for the next 4 years. With factories coming on in Giga Shanghai, Giga Berlin, Giga Austin, and already having Fremont up and running as they do, that means that each factory is currently on the hook for producing at least 250,000 vehicles in their estimation each year. And I think that would be well above the operating number that we'll see in 2023 or in 2024. Now, on the other hand, I have to take pause here when it comes to this bull case. See, out in this world right now, they're estimating for 10 million vehicles to be produced by Tesla alone by 2025. That's incredible. Wow, I mean, look, 10 million vehicles gets me excited. But looking at the average selling price, it gives me a second to think here. Look, you have to understand what the projection looks like. That means that requires a lower priced vehicle to get to this revenue of $367 billion. That signals to me that ARK believes that Tesla is closer to getting to a $25,000 vehicle here in the short term. Now, that's the only way I can see them driving up their numbers in combination with Cybertruck taking market share in the pickup truck market. I mean, look, the pickup truck market accounted for 3.7% of worldwide market revenue when it came to vehicles in 2019. Ford brought in $22 billion alone in their 2019 revenue from their portion of the pickup segment. Now, that is what I am uncertain about right now. And seeing these projections, right now, I think that this is going to have to account for a lot, but it leaves us in the dark. And when it comes to being in the dark right now about how they got to these 10 million vehicles, I need to take a closer look at the bear case. Look at how they have the ride-hailing revenue only in their bear case and autonomous ride-hailing only in their bull case scenario. See, I'm going to have to hope they're breaking this down for us as we proceed through this article. But I see that they believe there's really no reason to do human ride-hailing at this point. The revenue is crazy though, in each way you look at it. Well, $42 billion as a projection for any company, that would be amazing. But this just being the bear case for Tesla is an even more crazier scenario. If autonomous ride hailing is worth $327 billion in revenue just for Tesla, I can only imagine that this means that they have taken so much market share from Lyft and Uber at the level we would not even see them utilized in today's market like they are. Man, look, I gotta say, ARK is bringing the heat when it comes to these projections. So let's look at the projected market caps right now. So the bear case in their situation is $1.5 trillion market cap for Tesla by 2025. I was considering in my projections that Tesla would hit 1 trillion market cap by 2024. So that's kind of in line with my projections. But then you see $4 trillion market cap by 2025. Oh my God. These numbers keep getting more and more insane. A share price of $1,500 in 2025 for a bear case, folks? Come on. Bull case, 4,000. Either way, you have to suspect that we will have to see another stock split before this, because I can't see a stock trading at these numbers. I can't imagine that Tesla want to be valued at that share price by this high in 2025. Either way, though, I'm going to be here for it. To our model, we pushed our forecast price target forward 1 year to 2025. We refined our estimates for Tesla's capital efficiency. We added Tesla's insurance business to our model. We added assumptions for a human-driven ride-hail service. We increased the probability of Tesla achieving fully autonomous driving within 5 years. Gross margin never exceeds 25% in their bull case. That's crazy to see as well. All this growth at this margin expectation. Looking at the bear case though, however, you see that the gross margin never exceeds 40%. That's incredible as well. So looking at this model, you got to think for a second. You got to be more in depth about it, looking at these percentages of the autonomous vehicles. See, the ride-hailing of autonomous vehicle platform in 2025 will put it at a 60% allocation versus a 40% allocation for the human ride-hailing network at the same time. So I imagine that they believe that this will be the catalyst to lower their capex between their two scenarios. Since our 2024 analysis, we have increased our assumptions for Tesla's capital efficiency. Previously, we estimated that Tesla would spend $11,000 to $16,000 per incremental unit of capacity in 2024. In 2019, Tesla spent $1.33 billion on capital expenditures and produced 509,737 vehicles, an increase of 144,505 vehicles from the previous year, suggesting that its capex per incremental vehicle produced was roughly $9,200. In 2020, Tesla spent $3.16 billion on capex, putting capital efficiency in 2021 at $10,330, assuming a 60% increase in vehicle production. To give Tesla credit for what we believe is its superior capital efficiency, we lowered gross capital expenditure per car in our latest model, giving its updated estimates, along with additional year of growth added to our model. Our forecast for Tesla's unit sales is between 5 and 10 million vehicles in 2025. So like I said, they are expecting that the capital expenditures figures to lower base on the efficiency each gigafactory gives Tesla. This goes back to the basis of all this vertical integration that Tesla has prided themselves on. So okay, right? Let's think about this for a second. There's an explanation for how they're going to get between 5 and 10 million vehicles in 2025. I still consider that this will take a lot of things to go right without any hiccups. ARK estimates that Tesla could achieve better than average margins on insurance thanks to the highly detailed driving data it collects from customer vehicles. Partnering with underwriters, Tesla introduced its insurance product in August 2019. Currently, it's available only in California. ARK believes that in the next few years, Tesla could roll out its insurance offering to more states, underwriting its own insurance policies. Because its vehicles will have better than average safety profiles, Tesla should be able to use real-time data to offer insurance in its vehicles, pricing it dynamically, lowering customer acquisition costs and increasing margins. ARK estimates that Tesla could achieve margins close to 40% if it were to sell 40% of its vehicles with its own insurance offering by 2025. Tesla insurance revenues could approach $23 billion annually in our bear case. In our bull case, ARK estimates that as robo-taxis ramp, Tesla's insurance revenues will be incorporated into a platform fee. Insurance boosts our price target by roughly $60 in 2025. So okay, they have insurance built into the autonomous platform as part of the service, which that makes sense. I mean, if you think this is why that figure will be lower and it's such a low figure in a bull case, then that understands why the margins are super high in their bear case. As in their bear case, it would primarily be used to cover purchased vehicles by consumers based on their safety measures though, which makes sense. So what I mean by that is it's more than likely will cost you less to have their insurance with Tesla, since they already have their vehicles equipped with cameras on them, and they have a higher safety rating than most vehicles, which their vehicles are leading the pathway with. This is interesting to say the least, though, in the perspective on how they built in this concept when it comes to the insurance model in their thesis. ARK's bear case now includes Tesla's opportunity to launch a human-driven ride-hail service. Previously, ARK detailed that a Tesla human-driven ride-hail service would have to have a lower cost structure than that of incumbent companies, laying the foundation for a fully autonomous ride-hail network. In our bear case example, ride-hail could add an additional $20 billion to Tesla's operating profit by 2025, increasing our price target by about $500. In preparation for its robo-taxi service, Tesla could launch a human-driven ride-hail network first, delivering a highly profitable recurring revenue stream and limiting the downside of a failed autonomous service. A human-driven ride-hail service could boost Tesla's price target. So the way I interpret this is that they believe Tesla should launch their ride-hailing network with humans as soon as possible, as this would be the launching point for their stock price to head towards $1,500. I'm not mad at that. I think that's unbelievable, and I think that's the right move to make, because this allows them to move into autonomous sooner, pushing them into that realm of their bear case of 3,000. In our last valuation model, ARK assumed that Tesla had a 30% chance of delivering fully autonomous driving in the 5 years ended 2024. Now, ARK estimates that the probability is 50% by 2025. Since our last forecast, neural networks have solved many complex problems previously considered unsolvable, increasing the probability that robo-taxis are viable. ARK estimates that Tesla's vehicle fleet gives it access to 30 to 40 million miles in data per day, up from 20 million per day last year. If successful, Tesla could scale its robo-taxi service rapidly, allocating the additional cash in turn to manufacturing capacity, serving its autonomous network. If 60% of its vehicles equipped with autopilot were to serve as robotaxi, Tesla could generate an additional $160 billion in EBITDA in 2025. ARK is super bullish with this. Oh my God, the writing of this paragraph, they believe that it's a 50% probability that they see full autonomous driving by 2025. They already increased their miles collection data for Tesla, obviously through the 500,000 vehicles that they just sold last year in 2020, which they're estimating now that they're up to 50 to 100% increase in the numbers of miles collected each day. They see profits brought in from the autonomous platform being another catalyst for the manufacturing of more plants. This is how they get to their projection for 10 million vehicles in 2025. That's definitely a bullish take if you ever had to have one, right? If you look up dictionary for the ARK Invest, it'll be by bull. The chart for this Tesla projections, man, is coming in crazy. You can actually see what ARK is already considering that Tesla won't just hit 4,000, but somewhere between a $6,000 to $8,000 stock price, which I can't even fathom. So look, I see this as a possibility, but I don't understand the high percentages of this happening in 2025. It's like I said earlier. It would take 100% efficiency when it comes to all the things that would have to go right for Tesla. And one of those things that I believe would not happen is a type of a headwind that we can't even understand just yet, and that's legislation. Unless we have a lot of lobbyists working on the autonomous front in mass droves, I can't see where they can get profits so soon on this. Don't get me wrong. It gets me excited now, but I just don't know how realistic this could be. Comment down below on how much conviction you have that Tesla launches an autonomous network by 2025. I can't wait to hear any of your thoughts on this one. In many of the low-end cases we modeled, production constraints limited Tesla to fewer than 4 million units produced per year, while technological and logistical bottlenecks prevent the launch of both human-driven and autonomous ride-hail networks as shown in gray. When production is not constrained, a human-driven ride-hail network increases the expected price target range as shown in green. Less than 20% of Tesla vehicles sold into ride-hail in 2025. And Navy, 20 to 70% of Tesla vehicles sold into ride-hail in 2025. Finally, in purple, The high-end price targets incorporate the assumption that Tesla launches a robo-taxi service. In ARK's Tesla's price target, please note that electric vehicle and robo-taxi business lines generate roughly 40 and 50% of Tesla's expected market cap. The average values from our Monte Carlo simulation. So in this slide, they showing that this shows the likelihood of each occurrence that runs through, they ran through their forecast model. Now, obviously, the purple shade shows that the forecast model has high conviction of delivering robo-taxis by 2025. This model accounts for 40 to 50% of Tesla's market cap if robo-taxis are launched as a service. That means ARK places a $1.5 to $2 trillion valuation on the successful launch of robo-taxis. This article keeps just blowing my mind more and more, which means that they see robo-taxis being more valuable than the vehicles themselves in their $3 trillion market cap value case. Given the updates outlined in this blog, ARK's 2025 price target for Tesla is $3,000. ARK's bear and bull case suggests that Tesla could be worth roughly $1,500 and $4,000 per share respectively. We publish our model on GitHub and invite you to test your own assumptions and or craft visualizations from the simulation outputs for our assumptions. We do not model Tesla's utility energy storage or solar business in our models. We also have not modeled Bitcoin assumptions in our model. For ARK's work on Bitcoin as corporate cash, please download our latest big idea presentation. Did I just read that they say they are not include energy storage or solar into their model? This is bananas. What? This can't be right. Are we serious right now? Then let's look at the valuation chart again. It's ARK burying the lead in this article, that they believe Tesla is valued closer to a 6 trillion market cap versus the 3 to 4 trillion that they discussed. You have to imagine that these two parts of the business, whether we're talking about energy or solar, are going to be even bigger than what we saw already. The margins on this has already increased significantly in the latest annual report. See, this is very sneaky of ARK. See, this whole time I was thinking that both these verticals and their estimations of each case had energy and solar priced in. Fam, all I just read and all that we just discovered together, if you are not in this stock, ask yourself, why not? Am I a bull when it comes to Tesla? Short answer, you know, is yes. But I'm too conservative on this topic. I'm telling you, I was only projecting Tesla to be about a $2 trillion market cap by 2030, not 2025. And ARK is out here with guns blazing. ARK is half right. We are talking about a company with a $1,400 share price valued at $1.5 trillion market cap without energy and solar taken into account. Sharks, if you are hesitant about investing in this company, man, look, this gotta be the time for you to be getting on the internet and doing your own research and see why you are not really in this company at all, or even heavy as you should be. I leave you with this though, right? Let's go back and let's just review the run that Amazon is currently on and where it came from. Do you want to be one of those people who are closer to 45, 40, 50 years old, looking at the opportunity to have your wealth locked in with a company that may be taking the world by storm in another 5 to 10 years? Let's just say Tesla even hits half of the metrics presented in this article, right? You have an opportunity to set your life and your family's life on the right trajectory for years to come. Remember, everyone laughed at ARK Invest the last time they predicted Tesla to 2,500. So don't get ahead of yourself and think none of this is possible. This makes me feel like I need more money and I need it now. Until next time, y'all stay safe. I love y'all.